So did Fannie Mae and Freddie Mac just deliver the death blow to your dreams of owning a second home? And what's with all the noise when it comes to financing a condominium? Stick around. More to come in this week's Homebuyer Radio.
This is Homebuyer Radio with home loan expert Dan Morales. Dan has been one of the nation's leading mortgage lenders since 1991. And weekly he shares with you valuable insight into the home buying process. Whether it's your first home or not, Dan will help you have a better understanding of the home buying process. Let's get started with this week's episode. Dan, what do you have for us this week?
It is January 23, 2022. I keep saying like 2021. Go figure, right? Like a year behind. But anyways, this week I wanted to talk about some pretty big changes that just took place in regards to those of you who are looking to buy a second home, and for those of you who are interested in financing the purchase of a condominium. Recently, there's been some pretty big changes that have taken place from both Fannie Mae and Freddie Mac when it comes to those two different types of properties, okay? When it comes to a second home, both Fannie Mae and Freddie Mac will continue to fund loans for the acquisition of a second home. The only thing that's different is the price you're going to pay, okay? If you are looking to finance a second home, traditionally, for the most part, those loans have always been priced kind of the same as an owner-occupied property, meaning that there really wasn't a big price difference unless you were starting to do a smaller down payment, okay? For the most part, those rates and terms were the same, whether you were buying a primary residence or a second home. Well, if you will, Fannie Mae might have just delivered the death blow to a lot of you clients who are in the market or thinking, gosh, now's a great time to go buy that second home in Florida or that second home in Arizona or someplace warm and sunny, right? Says the loan officer in Michigan. But, for those of you who are looking to buy that vacation home, you can still do it. The cost to finance that vacation home just got significantly more expensive, meaning that, you are either going to pay a lot more in upfront closing cost as part of your loan, or you're going to offset that upfront closing cost in the form of a higher interest rate. And it is a pretty significant change, where, most second homes are starting to price out very similar to an investment property. Now, if you weren't familiar with that, investment property has always had rates and terms that are less favorable than, let's say, an owner-occupied type of property. Now, a lot of times people will wonder, well, why this sudden change from Fannie and Freddie, okay? Now, there was no notice given to us lenders. This just kind of came out of the blue and, hey, guess what? We're changing the price, and it's going to be effective with loans that are delivered as of April 1. Now, for those of you who are consumers, that basically means that if you're in the market to buy a second home, that price change is already going to impact most of you, okay? Most lenders have already made a change to their pricing structure to accommodate for the fact that those loans have to be delivered by April 1, and if they're not, this pricing adjuster takes place, okay? So what happens is most lenders have already gone through and have accounted for that as part of what they're doing. So it is going to impact you right away. But when you look at, financing that second home, why this big change from Fannie and Freddie? Well, really, there is a big emphasis from the government on helping to, if you will, finance more low to moderate or affordable, income buyers, help them get into a house more than, let's say, maybe helping you finance your second home. Okay. So, the government is really getting much more focused on making sure there's more, if you will, housing equality by providing more opportunities for maybe the underserved marketplace where they don't even own their first home, let alone to begin thinking about financing a second home or, vacation type of property. So one of the ways to kind of drive behavior to, help that happen is to almost discourage financing, let's say, these second homes. Well, how do you discourage financing those second homes? Well, you say if we're going to do them, we're going to do them at a much higher price than what we did in the past. And we're going to put more emphasis, let's say, on trying to finance, the underserved marketplace or those low to moderate income buyers or those folks who just don't own their first home. We're going to put a little more time and energy trying to help those people get to the point where they own their first house. So, there is some logic behind this. It's just there was no forewarning, to those of us in the industry. So it kind of caught us off guard. So if you're in the market for a second home, just expect that you are likely going to pay a higher rate, or you're going to be impacted in the form of higher closing costs. Okay. Now, there are some unique circumstances. Like I know in our case, we have some options for clients that are financing vacation homes here in Michigan, where we offer some really very attractive rates and terms, and we have some options that you're not going to find some other places that could really work for your benefit. So if you're financing a vacation home really in any part of the country, obviously we'd love to help you. We have a ton of options. We have some options that actually do not involve Fannie Mae and Freddie Mac that are some really competitive options that may benefit you. Okay, so that's just talking about second homes. Now let's kind of switch gears and let's talk about condominiums. We've talked about condominiums on the podcast multiple times. We've talked about just kind of, the warrantable and non-warrantable condominiums. Long story short, a warrantable condominium is a condominium project that meets Fannie Mae and Freddie Mac's criteria. A non-warrantable condominium is one that does not meet their criteria. Okay. Now, why do you care as a would-be home buyer, or I should say condo owner? Why would you care? Well, you would care because you get better rates and terms for your condominium purchase when it is a warrantable condominium, meaning that it meets Fannie Mae and Freddie Mac's criteria. You get more favorable rates and terms, just greater flexibility in your overall ability to qualify and so on, okay? Now, when you have a condominium project that is non-warrantable, where it doesn't meet their criteria, what happens is a lot of lenders won't do those loans, period. You may be told that, sorry, condominium project is non-warrantable, so your loan is denied. Or if a lender has an option, the options you get may not be as favorable as what you were looking at with, let's say, a warrantable condominium. Okay. Now, fortunately, here at North Point, we finance a ton of non-warrantable condominiums, so we have a lot of programs and options that are available for you to help you get across the finish line. However, there was a recent change by both Fannie Mae and Freddie Mac where they, if you will, have what they call a condominium questionnaire. Okay, this questionnaire goes to the condominium association, and the association has to provide a lot of data and information back to the lender. Okay, now depending on the, let's say, occupancy of the property, where the property is located, down payment, and so on, sometimes the just that questionnaire with the appraisal is the majority of what the bank is going to look at with proof of insurance for the association. Other times we're going to look at the budget and the bylaws and some additional information. The more information we look at, the higher the probability that your condominium project could be non-warrantable. Why do you care? Again, you get better terms with the warrantable condominium versus a non-warrantable condominium. Okay, so you care for that reason. Okay, so why does it matter to you in the end? What happens is you get the better rates and terms with that warrantable condominium. But the big part of this new condominium questionnaire is, in addition to, let's say, the standard review process, this condominium questionnaire is going to ask for a lot more information. There are additional questions that are being asked specifically, as it relates to the condition of the property, if there are any repairs underway, or if there's deferred maintenance or things like that. Those types of things can cause your condominium to be deemed non-warrantable. So, and this really is birthed from, the tragedy that happened in Florida, where that condominium project, part of it collapsed, right? And so when that happened, that set off, alarms, if you will, with Fannie Mae and Freddie Mac that, hey, we need to look closer at these projects and make sure that we're not financing a bunch of units in one of these condominium projects where the building collapses. Oh, and hey, we should probably make sure that we have adequate insurance on those condominiums that we do have. So you can expect that if you're buying a condominium, you're going to get some extra scrutiny. And in some cases, a lender may not know if your condominium project is going to be non-warrantable until they get a series of pieces of information back as part of processing your loan. So have some patience with lenders as they go through and they kind of muddle their way, if you will, through these new guidelines and do their best to serve you. It is really important that if you're buying a condominium, that you are working with a lender that has options for you if your condominium project is non-warrantable. If the condominium project is non-warrantable and you don't have any backup plans or options, you may be a dead duck there, okay? So it's really important that you have a lender such as myself and at North Point here. We have condominium options, warrantable, non-warrantable, and we lend throughout all 50 states. It's really important that you have kind of a game plan so that if your project is warrantable, here's what the option looks like. If it's non-warrantable, here's maybe 2 or 3 additional options that you have available to you. That way you know what the worst case scenario is going to be should your condominium project be non-warrantable. I can tell you on a monthly basis, I get these condominiums where, people were in process someplace else. They find out the condominium project is non-warrantable, and then all of a sudden they're scrambling to find a new lender to try to put that deal together. Oftentimes we get those deals done, but you're better off just starting with somebody who has those plan B and C options right away, because with this new condominium questionnaire, I can tell you many more condominium projects are going to end up being non-warrantable. And if you are buying a condominium, that could put you in a really bad spot. And so we're going to go back to, doing some additional episodes on condominium financing, just because there's a lot that's misunderstood when it comes to that type of financing. So that's something that's going to be really important, that those of you who are looking to buy a condominium, you understand condominiums are great as long as you understand what you're buying and you understand some, pieces of data or information about the association, so you can make sure that you're making a good, wise choice when it's all said and done. Hey, I'm Dan Morales, America's Mortgage Man. My NMLS number is 709-729. If you have an idea for a show, or you have questions, or things that you'd love for us to answer as part of the show here, let me know. We do those on a regular basis. I get a lot of email from clients with some unique situations, and we try to cover some of those as part of the broadcast here that we do on a weekly basis. But do me a favor, if you can, share the show with friends, family, people who would benefit from listening to it. If you're in a real estate industry, you're a realtor or builder, a great source of information, and we'd love for you to share it with your sphere of influence as well. Hey, thanks for listening. Have a great day.
Homebuyer Radio is a production of Dan Morales, home lending expert with North Point Bank, NMLS number 709-729. Dan can be reached at 616-931-4629 or online at danmorales.com. Thanks for listening, and we invite your questions and show ideas at homebuyerradio.com. All loans are subject to credit approval. This is not a commitment to lend. North Point Bank is an equal housing lender. All rights reserved.